Hey everyone, and welcome. Today, we're going to dive into a seriously powerful tax tool that can literally help fund your company's growth. It's called Accelerated Capital Allowance, or ACA for short. Now, I know it sounds technical, but trust me, it's basically a way to make those big, game-changing investments happen a whole lot faster. Let's break it all down.
So let me just ask you this. Are you thinking about a big upgrade right now? Maybe that brand new piece of machinery that would completely change your production line. Or maybe a huge tech overhaul to finally get ahead of the competition. It's a massive decision, right? And a huge expense.
Well, what if I told you there was a financial tool built specifically to help you take that leap? An incentive that's designed to help you modernize, automate, and get way more efficient, all while taking some of that financial pressure off. That tool is the Accelerated Capital Allowance, ACA. Honestly, the best way to think about it is like a financial fast-forward button for your business. It lets you get the benefits of your big investments much, much sooner than you normally would.
So what is it really? In official terms, ACA is a tax incentive that lets your business write off a bigger chunk of an asset's cost, like that new equipment, way faster than usual. And what does that mean? It means you reduce your taxable income more quickly, which, let's be honest, is fantastic news for your bottom line. And you gotta understand, this isn't some random tax loophole. Not at all. This is a deliberate government strategy. They want businesses like yours to invest in these exact things: modernization, automation, green tech, because when you get more productive and efficient, guess what? The whole economy gets a boost. Okay, so to really get why ACA is such a game changer, we have to put it side by side with the standard, normal capital allowance. The core difference really boils down to two things: speed and immediate financial impact.
This table lays it out perfectly. Now, don't worry about the acronyms just yet. We're going to break down IA and AA in a second, but just look at the big picture. With normal allowances, the benefit is slow and gradual. With ACA, the rates are higher, the claim period is way shorter, and the tax relief is immediate and so much bigger.
So let's zoom in on that. The first huge difference is the initial allowance, or IA. That's the deduction you get in year one. Normally it's about 20%, but with ACA, it can jump to 40%. Think about that. On a $100,000 machine, that's the difference between a 20 grand deduction and a 40 grand deduction right out of the gate. That is a massive amount of cash back in your pocket right when you need it most. And the second major difference is the timeline. With normal allowances, you're spreading that tax benefit out over the entire life of the asset, which could be years and years. But ACA lets you write off the asset in a much shorter period. It basically crams all that tax-saving goodness into the first couple of years.
Okay, so that's the how it works. We've gone through the technical bits, but now let's get to what really matters. What does this all actually mean for your business, for your bottom line? It creates this incredible chain reaction for growth. It all starts when you claim those bigger allowances early on. That gives you immediate tax relief, right? Which then directly improves your cash flow. And when you have more cash just sitting there, what can you do? You can reinvest it back into the business, buy even more modern stuff, hire more people, and basically fuel your next wave of growth. The source material just nails it with this quote. ACA improves cash flow for businesses due to deferred tax payments. And that's the key idea. It's not about avoiding tax forever, it's about delaying it. It frees up your money so you can use it today for growth, instead of just handing it over to the tax man. That cash is the absolute lifeblood of any business that's trying to expand. All right, so you're probably thinking, this sounds amazing, what's the catch? Well, there isn't really a catch, but there are a few rules you gotta play by to make sure this is all done by the book. Let's walk through them real quick. And honestly, the conditions are super straightforward. First off, the asset has to be new. The whole point is to bring new tech into the economy. It also has to be used for an approved purpose, like that automation or green technology we mentioned. And of course, you've got to keep clear records and invoices. It's really just standard best practice for any major business purchase. So as we start to wrap this up, I want you to stop thinking of ACA as just another line on a tax form. It's time to see the big picture here, because this is a truly strategic advantage for your business. So here it is, the most crucial point. ACA is not really about the tax deduction. I mean, that's just the mechanism. What this is really about is accelerating your company's future. It's a tool for funding your modernization, for sharpening your competitive edge, and for building a stronger, better business for tomorrow. And that kind of brings us to our final question, a question for you. Now that you know how this all works, the real question isn't whether you can use this tool, but whether you can afford not to. The opportunity to fund your growth and blow past your competitors is sitting right there. So, what are you going to do with it?